Welcome to Invest in the Family Radio, a podcast about learning to invest. My name is Brian Bain, and I am your host, and I'm excited to be back with you this week. Last week, we kicked off a two-part series on digital currencies or cryptocurrencies or Bitcoin and altcoins, whatever terminology you want to use. I prefer digital currencies. So last week, we kicked off this series, and last week, we talked a lot about kind of some higher-level things in terms of how I feel like what the value add I feel like digital currencies offer in general, what is unique about them, why they are in many ways an improvement over other forms of money. And again, I was defining money basically as a way to store and exchange value. And so in that sense, I feel like most digital currencies do very well fit that definition, whether they're an improvement, whether they're best for any particular scenario, that's open to debate and open to different opinions. But we talked last week about what makes them unique. We talked about the idea of the blockchain and no longer having a need for third-party verification. We talked about things like the digital currency called Ethereum, which is the second largest digital currency by market cap after Bitcoin. And those two far away exceed all of the digital currencies in terms of size and scope. Ethereum they offer the same blockchain type idea as Bitcoin does, but in addition, they offer this new idea of something called a smart contract. We talked about all that last week. I won't get into too much detail on that now, but this week I want to talk a little bit more some of the practical dynamics. So let's say you want to start purchasing or even finding ways to use digital currencies. Where on earth do you start? How do you do that? We're going to talk about that today as well. We're also going to talk about the current state of digital currencies in general in terms of being in a bubble or where they're going from here as well. But I also want to, before we get in there, I want to remind you, if you enjoy this podcast, please be sure and subscribe to the podcast and whatever medium you're enjoying it right now, whether it be iTunes, Stitcher, Google Play, or any other form of of means of listening to this, be sure and hit subscribe so that way whenever I release a new podcast or episode, you will be among the first to know that. So thank you for doing that, and thank you for joining me. So let's get started. Let's say you want to purchase digital currencies. Well, there are a few different key components you need to be aware of. There's going to be, first of all, an exchange, and second of all, there's going to be a wallet. And actually, that's about it. Those are the two primary things, because basically, you need a place to purchase the digital currency, an exchange, and then you need a place to store it, which is your wallet. And so an exchange is just that. Think about exchange think a stock exchange, a marketplace. It's a place you can go to buy and sell digital currencies. And so, but the thing is, there are lots of different exchanges out there, and there's some digital currencies are available on some exchanges, some are not on others. Some digital currencies are available on almost every exchange, and some are available only on one. And sometimes there's digital currencies only available on one hard to find exchange, And so there's a lot of different kind of crazy dynamics like that. And then so you want to find an exchange where you can buy the digital currency you're interested in. Then you need a place to store that digital currency. And usually you can store the digital currency in the exchange itself. You can have your wallet in the exchange. You can download a software client from the website for the digital currency, and you can store your digital currency in that wallet on your computer. Or in many cases, you can print out a wallet, create a paper wallet where you can store your digital currency there. So let me explain a little bit of that. First of all, in the exchange, the way I like to go about purchasing digital currencies is it all begins and ultimately ends with an exchange called Coinbase, Coinbase.com. I'll put a link to Coinbase in the show notes to this website and links to pretty much most things I talk about on this show. I'll try to make sure to include a link on the show notes as well, so you can find that and easily access that if interested. Because the reason I start and end things with Coinbase is a US-based exchange. They, in my opinion, I believe them to be very credible. They have very sound capital backing from a lot of very reputable people and organizations. And they've been doing this for a number of years. So they're kind of like a leading exchange for digital currencies. And they have put a very high premium on security and quality and ease of use. And I feel like they do a great job of that. So, and because of that, they do things correctly and well. They work really hard to have good relationships with banks. And so you were able, so with Coinbase, I can put money into Coinbase directly from my bank account, or I can use a credit card, either or. And so that way, basically, I get my dollars into digital currency through Coinbase. And in Coinbase, I can purchase Bitcoin, I can purchase Ethereum, and I can purchase Litecoin, which I won't spend much time talking about Litecoin right now. But those are the 3 digital currencies you can buy and sell directly on Coinbase. But there are a ton of other digital currencies that you cannot access through Coinbase. So what I do is I will purchase Bitcoin or Ethereum, depending on what I'm trying to buy, through Coinbase, and then I will send that amount of Bitcoin or Ethereum to another exchange so that I can purchase another digital currency that is not listed on Coinbase. So let's pull up an example. Let's say I want to purchase a what's another digital currency I want to purchase? As soon as I said that, I started thinking through all the digital currencies. I'm like, well, which one do I want to pick? Let's say you pick. There's one called IOTA, IOTA, whatever, IOTA. And so I won't get into a lot of details about what these currencies offer or hope to do at this point. I may do a little bit of that toward the end of the podcast. Let's say I want to buy some IOTA, but you know what? I can't do that through Coinbase because they don't manage that specific digital currency. What I can then do is figure out, well, where can I buy IOTA? So I can Google, buy IOTA coin, buy IOTA digital currency, or purchase IOTA, or whatever, however I want to do that. So I can just basically Google and figure out what places can I purchase it. And a lot of times, the website behind each digital currency may list exchanges where you can purchase those digital currencies as well. And so if you go to coinmarketcap.com, for every digital currency listed there, they will have a direct link to their website, so you can find out more information there as well. So let's say I want to buy some IOTA. So I can then go to, there's 2 websites, one called Shapeshift.io and one called Changelly.com. And I guess they technically classify as exchanges. What they do is they make it really simple to exchange one digital currency for another. For example, if I want to buy, if I want to use some of my Bitcoin to purchase IOTA, I could go look at Shapeshift.io and Changelly.com and see, well, do they host IOTA? All of these are going to host Ethereum and Bitcoin because they're just the biggest ones out there. But are they able to work with IOTA? And if I find out that Shapeshift.io works with IOTA, then all I have to do is go to Coinbase, say I buy 0.1 Bitcoin, okay, which right now would be worth probably like $400, which is crazy to think about, since Bitcoin itself one full Bitcoin is worth about $400 about a year ago. Now 0.1 Bitcoin is worth about $400, which is insane. So if I buy 0.1 Bitcoin for about $400, then I have 0.1 Bitcoin. And then I can send, I go into Shapeshift.io and I say, I want to exchange Bitcoin for IOTA. And they'll give me a Bitcoin address to send Bitcoin to. So then I go to Coinbase and I say, send 0.1 Bitcoin to this address that I got from Shapeshift. And once I do that, then the process begins. Well, then Shapeshift says, okay, and then where do you want us to send the IOTA once we exchange it? And then I'll need to have a public address for my IOTA wallet that I can enter in. And then I press go or start or whatever the button is, purchase. And then Shapeshift or Changelly, they both do the same thing. Just they operate a little bit differently, and they both support different currencies. And then they'll automatically exchange Bitcoin for IOTA and then send the IOTA that I purchased to the wallet address that I gave them. Again, it may take a little bit of time for that exchange to take place depending on how busy the Bitcoin or Ethereum network may be and other factors as well. But that's how I can purchase other digital currencies. But if they're not available on Shapeshift or Changelly, I can look at other exchanges. And one major exchange out there is called Bittrex, Bittrex.com. And there are a few other big ones I hear a lot about, like Kraken.com and Poloniex.com, but I don't use either one of those, so I won't spend a lot of time talking about them. But that doesn't mean they're not great. I just have not had a need for them so far. Bittrex, Bittrex.com. They support a lot of different digital currencies, and so most times I can find what I want through them. But there are some situations where there's some newer digital currencies that are not supported by many exchanges, and you may have to be creative in finding some peripheral or small random exchanges that where you can purchase some digital currencies. Like there's a digital currency that I've purchased recently called Bitcoins. It's a BQX is the ticker for Bitcoins, and it's a long shot digital currency. It could go to zero or it could go to like $100. I bought it for a nickel. And now it's worth almost $1. So that was kind of awesome. That's a nice 1 month return of 20x, which is pretty crazy. And so Bitcoins, but where I couldn't figure out, it wasn't on any of the main exchanges. It wasn't on Shapeshift. It wasn't on Changelly. So I had to Google around and figure out, where do I buy this? And there's some exchange I hadn't heard of before. But they didn't require a lot of information from me. They just required a login. So I wasn't putting any in personal data at risk. So I created an account. And I tested it with, and again, anytime you're going to use a different exchange or that kind of stuff, test it with a really small amount of digital currency first, like $10 worth or something, or whatever, some small amount that if it goes wrong or something gets messed up, or you do something wrong, then it's a $10 mistake and not a $100 mistake or $1,000 mistake or whatever it could be. So I found this exchange, and so I was going to buy my Bitcoins on there, and so I sent either Bitcoin and or Ethereum to my, I said I wanted to deposit, I had to deposit Bitcoin with this exchange. Then once my Bitcoin showed up in my wallet on that exchange account, I then said, okay, now I want to buy Bitcoins with this amount of Bitcoin. So then I basically exchanged my Bitcoin for Bitcoins. And then I've got, say, 100 Bitcoins on in my wallet for this exchange. But my general rule of thumb is I don't like keeping much digital currency in an exchange. I feel more comfortable with Coinbase and maybe Bittrex because they're higher profile, and they're probably going to have a lot more higher quality security associated with them. But in either event, if I have the ability to store my digital currency in a paper wallet, I almost always choose to do so. And what a paper wallet is, again, I may have said this a while ago, but basically you can have 3 different kinds of wallets. You can have a wallet in an exchange. You can have a software wallet on your computer that you download from the website, or through the website, from a link from the website, from the company that create the digital currency website the company behind the digital currency, their website. Sorry, that shouldn't have been so hard to say. You can download software and have a wallet on your computer, or you can print out a paper wallet, and which is just what it sounds like. It's a piece of paper that has the public and private key, the public address and private key for your wallet, printed out on a piece of paper. So that way it's not stored on your computer and it's not stored in an online exchange. So it's that much harder for someone to break in or hack in and steal. I try to make sure and not store my private keys anywhere on my computer, and I try to not store my digital currencies in an online exchange. So it makes it harder for them to be compromised and stolen. And again, the way a wallet works is, again, so I haven't gotten the wallets yet, so I'm getting ahead of my game. Well, I guess it's time to talk about wallets, because once you purchase a digital currency on an exchange or through Changelly or through Shapeshift.io or however you want to do that, and then you want to move it to a wallet. Again, I mentioned you can keep it, you can leave it in the exchange if you want to, which I don't like to do, but sometimes have before. Or you can download a software wallet for your computer, which I'm also not crazy about, but sometimes still do because there's not another good option. But if there's a paper wallet option, and most digital currencies have some form of most legitimate digital currencies have some form of a paper wallet option available. I usually do that. And again, whenever you're creating a paper wallet, usually if you're going to a reputable site to create one, they're going to give you some good security things to keep in mind. A lot of times you want to disconnect your computer from the internet. So just in case someone has some malware in your computer, or they're hacking your computer, then they can't communicate back and forth that way. And I'm sure there's always some way for someone to figure something out. Just like I learned a long time ago when my house got broken into, there's no such thing as crime prevention or theft prevention. There's just crime deterrence and theft deterrence. You can deter people, but you can't prevent any theft from happening. If someone wants it bad enough, they can usually find a way to do it. But you can, if you're smart and you use proper deterrent tactics, then you can protect yourself from most issues. Just like in your house, you have locks on your door, you have lights, maybe you have a dog, or you have different kinds of security. That doesn't mean someone can't break in and steal stuff, but it means it makes it a lot harder for them to do so, and it deters them from wanting to do so. An alarm system, video cameras, whatever, surveillance cameras. Same thing with digital currencies. Like, there's always a chance someone could find your private key and steal your digital currency. Just like there's a chance someone can steal your wallet, someone can steal precious metals or anything you have asset-wise. People can steal that. There's usually always a way for that to happen technically, but you can make it as hard as possible for them to do that, and encourage you to take all kinds of procedures with your digital currencies as well. Like when you create a wallet on your computer, make sure you're not connected to the internet so someone can't track that, or makes it harder for them to track that. And I make it a point, I don't store my private keys on my computer. And again, I back up. The way a digital currency wallet works is there can be two strings of digits, a public address and a private key. The public address is a string of numbers and letters, different characters that you could put on as a bumper sticker in your car. You can publish it on the internet. And all that means is someone can send digital currency to that account, and people can go online and find out how much digital currency is stored on that address, but they can't access it. In order to access anything in a wallet, you must have the private key. That's the way to unlock it and basically take things out of the wallet. So again, you can be as public as you want with your public address, but you have to be super careful with your private key, because that's how you access and take stuff out of the wallet, and that's how people can steal stuff from you. But that's also how you access it, because if you lose your private key, then you basically have lost all that digital currency. So again, be wise. You may want to create a couple different copies of a paper wallet, but secure them well. You can also store this information. You can store it electronically, but if I do that, I want to make sure I store it in an electronic way that is never connected to the internet. For example, a disk or a drive that you disconnect your computer from the internet, you plug that drive into your computer, and then you put the information on the drive, and then you take the drive off your computer, then you connect your computer to the internet again. Those are just some precautions you can take. There are more, but some precautions you can take to add a little more security to your digital currencies. So that's how it works. And usually there's a separate wallet for almost every digital currency. One major exception is any Ethereum-based digital currency. And there are a lot of them. A lot of the major digital currencies on coinmarketcap.com are based off of Ethereum. And if they are, and they are approved, they call it ERC20 approved. Basically, there's a certain protocol that they follow. That means you can store them on an Ethereum paper wallet or an Ethereum wallet. And so that's what I like to do. And so that makes it really easy. You can store a bunch of different digital currencies on one wallet. But usually that's just true for Ethereum-based digital currencies, whereas most other digital currencies are going to have their own unique wallet. So that's just the way it works. It can get a little confusing. Again, last week I compared things to back when we kind of shifted, when paper money was created, and so instead of exchanging gold or silver directly, you could deposit your gold into a bank, and the bank would give you bank notes that said, hey, they gave you a piece of paper that said, hey, this note represents 1 ounce of gold. And so you could exchange that paper with someone else, and basically that person then owns that gold. But there's some faith involved of like, well, do I trust the bank's going to be around and that this document is legal and real? So all kinds of were concerns back then. But the thing is, there's lots of different banks, and for almost every bank had their own notes or currencies that showed ownership of a certain amount of gold. Same way today, there's lots of different wallets and exchanges that can represent different coins or different digital currencies, and it's kind of a mess. And that's the reason I wanted to create this episode, because if someone wanted to get into digital currencies, it can be a steep learning curve to figure out, okay, what exchange do I use? How do I get set up on an exchange? Where do I store them? Okay, so if I've got one currency here, but I want to get another currency way over here, how do I do that? And so it took me a while of working through things, and it's kind of intimidating in the beginning because you don't know if you're doing things wrong. You're afraid to lose money. That's why I say always test with like a small amount, like $10 increments. So if you mess it up, one time I thought I messed up a larger amount of money I was kind of upset about, but I found out that it was not a problem, fortunately. So that's a brief primer on purchasing and storing digital currencies. Again, a lot more could be said, but that should be a nice, helpful introduction to get you started. But now that I've said that, here's a question. Should you get started? Is now a good time or a terrible time to purchase digital currencies? And I'm going to start with I got an email from a friend of mine, an investor who actually was one of the people who first got me into Bitcoin 4 or 5 years ago, and which I deeply appreciate. And he got me the Bitcoin. I won't say his name because he doesn't know I'm sharing this. But I'm a member of his paid service, and he basically sent out, it said the subject line was PSA, the future of Bitcoin and cryptocurrency. So basically public service announcement. And the whole point of this email is he's just saying, okay, Bitcoin is $4,300 at the time of him writing this. He's like, this is crazy. I'm using my own words. This is basically what he's communicating though. He said, I've been a Bitcoin bull since it was $100 and I still own some, but I do expect a Bitcoin crash back below $1,000 at some point in the next few months or year or so. So it says buyers, traders, speculators, miners of Bitcoin at $4,300 per Bitcoin, beware. And this is someone who has experience with the dot-com bubble and all that kind of stuff. He says, I think it's later in the Bitcoin cryptocurrency bubble than today's bulls think. Bitcoins and cryptocurrencies of today will probably be a lot like the dot-com bubble and subsequent dot-com crash. Bitcoin and other cryptocurrencies will probably crash 90% plus when they do crash, much like Amazon and Priceline from the years 2000 to 2002. Most variations of Bitcoin and most cryptocurrencies of today will go completely to zero before the crash is over, and that will be the time to invest in surviving cryptocurrencies, which will probably include Bitcoin. And so he goes on to say the things which I won't get into right now, but I feel like his view very strongly represents my own. I own a wide variety of different digital currencies. Many of them I've owned since before the big run up back in May and June. Some of them I've bought since then. And I've sold off a fair amount of my digital currency and have been able to cash in on some of those gains. Some of them I've not sold yet, but I do very closely align with the email my friend said, where I do feel like there is a bubble happening. Something else he says too is, says, would I short Bitcoin and or other cryptocurrencies right now? He says, no. There's no reason to. He says, bubbles can inflate larger than you ever thought possible, and trying to time the top of a bubble is very tough. He says, just consider this as a public service announcement. Again, it's very possible that Bitcoin and other cryptocurrencies, digital currencies, could double or triple from here. It's possible. But in either event, I think that I'm very confident, or I have a very high confidence ratio, or just confidence in general, in the fact that I think that there will be a significant crash in digital currencies again in the coming months, year. I don't know when, but the reality is, just like the dot-com bubble, I think the dot-com tech boom and bubble of the 1990s, early 2000s, that is a great illustration for what's happening in cryptocurrencies right now. Because for a lot of cryptocurrencies, digital currencies, they're just concepts. And some of them have amazing ambitions, amazing plans. Some of them have really great development teams, and some of them have plans laid out in a clear direction they're wanting to go, but very few of them are functionally doing what they set out to do yet. And just like the tech boom back in the 90s. You got all these companies with great ambitions, but who's going to actually deliver? And there's so much hype and excitement about those ambitions that even if they do deliver, the value that they're currently a lot of that delivery is already priced in. And I think a lot of that is true for most digital currencies right now. That being said, it will not surprise me at all if the hype reaches even more optimistic or euphoric levels from here, and Bitcoin and Ethereum and other digital currencies go much higher from here. It's very, very possible. And I still have some of a number of different ones in the event that does happen. But I've also cashed out to a degree that I'm comfortable with, so that if everything I have right now goes to zero, I can still sleep at night. And so I would encourage anyone else to keep that in mind. You make your own decisions. It's up to you. But I believe the 1990s tech boom and ultimate bust is a great parallel for what's happening in digital currencies today. And I am enthusiastically excited about a huge crash in digital currencies. I don't want anyone to be hurt by that. Like, I don't want that to happen. But in terms from an investment standpoint, I do believe that some of these digital currencies and companies behind them have amazing potential. I firmly believe that. And I think that in the years or decades that come, we will look back on the upcoming digital currency crash, whenever that happens, assuming it does happen, whenever that happens, and think it was the buying opportunity that the tech crash was back in 2002. And you look back, what if we would have bought Amazon back then, or Google back then, or whatever else back then? I think equivalent opportunities are coming with the upcoming digital currency crash, assuming that does happen. So that's that. And that's why I wanted to make that statement there. I want to give you some introduction on how you can get started, and give you a very stern public service announcement that now is, in my opinion, is not a good time to make any significant move in the digital currencies. So having said that, they may triple from here, they may go way up from here. I don't know, but I do have a strong confidence that most of the value in digital currency right now is based on hype, and is based on enthusiasm, and not based on a product and something actual value being created yet. And so for that reason, there's room for strong caution. So again, I had thought about talking a lot more about other digital currencies like Ethereum, Ripple, Litecoin, IOTA, Stratus, Neo, EOS, Iconium, Steam, Status, Golem, Augur, Bancor, Aragon, Civic, Library, Bitquints. There are a lot of different digital currencies that I have interest in, and I think can be fascinating to talk about, but I will not get into the details of those today. If you're interested in that, shoot me an email, Brian, B-R-I-A-N, at investorinthefamily.com, and let me know. And that's Brian, B-R-I-A-N, at investorinthefamily.com. And if there's enough interest, I may create another episode on some of those as well. I also do plan on creating an online summit this fall focused directly on digital currencies. I will let you know if that ends up happening. And so again, remember, this is still the wild, wild west. So there's lots of money being made for some people, and there's lots of pain on some people as well who have the misfortune of investing poorly. And many of these currencies will amount to nothing. Some have the potential to have a major impact on the world in the future. And I do believe the future potential of digital currencies has not even yet to even be scratched yet. I think that people were amazed years ago when Bitcoin hit $100, and it was just like this insane, oh my gosh, Bitcoin at $100. This is like this huge wealth boon for a lot of people. I think the day will come sooner than many of us may think, when we will look back on Bitcoin at $3,000 or Bitcoin at $4,000 and think, man, that was cheap. I wish I'd have bought more Bitcoin at $3,000 or $4,000. I think that day will come. And I think it's assuming the trajectory that I see, I think Bitcoin at $10,000, Bitcoin at much more than that, I think is very realistic and very possible. You can call me crazy. I do expect a big pullback before then, but I could be wrong. So there's that. And remember, there's only 21 million Bitcoin that will ever be made, and there's like 8 billion people in the world. So if you own a couple of Bitcoin, you are kind of ahead of the game. And Bitcoin and most digital currencies are almost infinitely divisible. So everyone in the world could still own some portion of Bitcoin, even though there's only 21 million of them. All that being said, be smart, be safe, make your own decisions. If you want more information, let me know. If you enjoyed this podcast, be sure to subscribe at Google Play, at iTunes, at Stitcher, or whatever medium you're enjoying this from. Hit subscribe or follow, and we'll look forward to talking to you next time. This is Brian, and thanks for joining the family. The information and opinions contained on this podcast are for educational purposes only. The information does not consider the economic status or risk profile of any specific person. The information and opinions expressed should not be construed as investment trading advice and does not constitute an offer or an invitation to make an offer to buy and sell securities.